Hello class, welcome to Chapter 9 Bad Debts and Losses, Part 2. Timing of casualty losses. Theft must deduct in year taxpayer discovers the theft. The disasters may elect to recognize the disaster loss in the year preceding the loss year, but the President must declare the region a disaster area. Insurance. Reduce loss by an actual or reasonable anticipated reimbursement. If fully covered, expect no deduction. So if you receive a full reimbursement from your insurance, you cannot take that deduction. Some bad debt issues, bona fide debtor-creditor relationship, basis in debt, year of worthlessness, business versus non-business bad debt. Guarantees. So you're going to have your creditor, you're going to have your debtor, and you have your guarantor. Those are the three parties when you're guaranteeing debt. Taxpayer basis in debt, determining basis in debt, amount lent by the creditor, property or service to extent creditor previously included in income. Deposits in insolvent banks, options in deducting losses. Personal casualty loss is going to be subject to $100 or 10% of the AGI. Loss will be ordinary in character. So that's going to be your subject to your $100, and then it's going to be 10% AGI. For-profit loss, deduct on a Schedule A, subject to the 2% AGI. Loss will be ordinary in character and limited to $20,000. Non-business debt, bad debt, deduct on the Schedule D. For AGI, the deduction will equal the short-term capital loss. Net operating losses, Section 172. Net operating losses, NOLs, arise when business expenses exceed the business income for the year. NOLs are not available for non-trade or business income, and expenses such as wages, dividends, interest, personal casualty losses, mortgage interest. NOL carryovers. Generally, the taxpayer cannot carry forward indefinitely any NOLs against future taxable income. They can carry forward, my bad. They can carry forward. Taxpayer is limited to 80% of taxable income before any NOL deduction is taken. Tax planning considerations. You have NOLs, you have your bad debt, and you have your casualties. Compliance considerations. You have casualty losses. The election must be attached to the tax return. Worthless securities. If it's a long-term loss, report on your Schedule D Part 2. If it's a short-term loss, you're going to report on Part 1. Excess business losses, EBLs. They started in 2018. A non-corporate taxpayer cannot deduct excess business losses. Any EBLs must be carried forward as part of the taxpayer's NOL. Calculating EBL, it's going to be your excess business losses is going to equal your total business deductions less the total business income and gains plus $250,000 or $500,000 if you're married filing joint. This concludes Chapter 9 Bad Debt and Losses. Thank you.